Hello. How's everybody doing? So I hope we're all having an awesome weekend. This is 50 pips in the house, rocking and rolling 29th 06 2014. Not making trade calls or recommendations because only you're responsible for the trades you may decide to take. And the fact that you're listening to this means you've read, you understand, you accept all the disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So welcome, guys. We're going to go into Monday, 30th of June, the last trading day of the month. So keep in mind we've got an interesting week coming up, okay, especially in terms of the data calendar, right? We'll start the week with some light data, but especially the CPIs out of Europe, so that's going to be interesting. And then we'll go on pretty much, this is the week when we get all the PMIs even from China coming out, and so it'll clearly be interesting. But we got two central banks on the wires really in terms of a rate statement. So we've got the Australian Central Bank on Tuesday, so that's clearly going to mean that the Aussie will be in the spotlight this week. And then we'll go into Thursday when we have the ECB press conference and the rate decision. But don't forget, we've also got Yellen speaking on Wednesday. We've got unemployment claims out of the US, etc., etc. So clearly there's potential for some movement, so it should be an interesting week coming up. Now, what I'm going to do this week, and keep it short and simple, a slight little change. What I'm going to do is, because a lot of people like it when I look at blank charts, so I'm going to do review some pairs, just a short and a few number of pairs, and do them on blank charts. Now keep in mind that nothing much has changed, so all the current charts on the blog are valid. So all the moves we're going to look at, if you want to see them in more detail with some of the moving averages or the precise levels or the shaded areas, just go on the blog. All the charts are on there. You can use the search function, but anyways, they're all posted last week pretty much. So let's start with the futures. What's going on? Well, we're trading pretty much 1950, and what we were talking about were basically that we were stuck. We're attempting some kind of a range shift, and we're talking about that 1900, 1950, and now that as long as we don't get any drastic change out of the Fed or in terms of rates out of the US, we'll be slowly making our way, trying to move up towards that 2000 level. And we've been talking about that for a long time. So right here you see we've got these 50s where we're stuck, which are the pivotal level. Down to the downside we have the 1900, which is the other big pivotal level, and that's pretty much where we're going to be stuck. And this is going to be really key. If we can get traction above these 1950s, then expect this to continue to grind its way higher. If not, we could see some kind of a move lower. Now keep in mind that they're pretty much extended in terms of on the daily chart. If you see the 200 DMA, it's coming in much further down. It's coming around the 1820s. So even a move all the way back there would still be on trend. So keep in mind that the market can remain irrational longer than you can stay solvent. And yes, it would be healthy to see a decent retracement, but a lot of people have gone broke trying to force it. So just be patient. Focus on interesting opportunities to scalp to the downside, see if you could get a runner, but clearly you don't want to fight this market too much. And in terms of the action, you see it's just the dips keep on getting bought, and as long as they keep on getting bought, it's going to be difficult for this market to get a lot of downside action. Now it's going to be interesting to see again how we react here. So clearly we'll be focused on seeing on how any pop, what kind of reaction we get at these highs, and if we get any new acceptance at highs. But again, it seems that we're still in some kind of a grind higher. We'd prefer to see a healthy retracement back into the lows, but at the moment we're still stuck pretty much in this 1900, 1950, 12,000 range. So we'll just have to be patient and see what happens there. Then in terms of all the other futures contracts, also crude, silver, the charts are up on the blog. If you're looking at gold, again, not a lot is happening. We're talking about the fact that we're looking for rotation back into the 1350s, right? So we got those 1350s out there, 1300 pretty much, and then the 1250s, right? And right now, the way this is trading, it looks like it's rotating higher, even though from those move at lows, we maintain that we were looking for still the bids keep on catching bids and rotating higher. Now, what's interesting is we've moved back above that 200. So this whole pivotal area, the 1300 and this 200 now is going to be acting as a support. So unless we get a daily close below that level expect to see this continue to hold a bid tone, try and move back towards those 1350s, and then those 1350s are likely going to be the next pivotal level for either the next ramp up into those 1395s to try and take out those 1400s, or some kind of a reaction. But we'd expect it to hold a bit of a bid tone, especially if the market starts to retrace a bit. In terms of Aussie, we're holding these highs, and remember we discussed a lot about the fact that those 93.30s were pivotal, and as long as it couldn't get any traction below the 93.30s, we'd expect this to continue to trade higher. And now with the RBA on the wires this week, this is going to be very interesting. So of course you've got the focus of these highs that are very close, so it's very tempting for stops to try and take those out above that 200 moving average, and you see that all the dips keep on getting bought. So at the moment it looks like it's holding a bid, and it looks like it wants to take those highs out. So the way we look at this really is into the week is if we can take those highs out and we continue to hold the bid tone, especially after the RBA, then we'd be looking at this to continue to try and make its way up into the 97 level. And, you know, post RBA, if we can't hold above those highs, then we'd expect it to try and make its way all the way back down towards the 200 DMA. So that's really the broader range and the broader risk we're seeing, especially with this rate decision. So it's clearly going to be an interesting week here for the Aussie. In terms of euro and cable, what's happening on cable? So cable really, if you look at it on a weekly chart, it's probably the clearest outlook, and you see that basically we're holding smack above those highs, and these highs, you know, which are going back to 209, were very aggressively defended for a long time. And now what we're seeing that the market is starting, as opposed to the fact that they were defended very aggressively in the past, the market is starting to sit quite comfortably at these levels. So, you know, everything would be pointing towards, even though we get choppy action around this level, to ultimately a break higher. So keep a very close eye, especially this week, on how we end the week above or below these 70.50s, right? If you look at it from a daily perspective, hold on, let me get rid of this. If not, people are gonna need sunglasses. Even though globally speaking, we've had a lot of choppy action, all those dips back towards those highs kept on getting bought. Even if it was whippy action, you know, and it looks like we're still in play holding that most recent fib move we've been talking about, with targets of, at least for the week, 171.10s. So it still looks like it's holding a bid. It's still looking like it's holding the upward rotation. Clearly it could retrace. It would be healthy to see some kind of retracement, but it looks like it's holding a pretty decent bid. And from a weekly perspective, you know, don't forget to keep an eye on how we trade around this level, because it's going to be very, very important. You know, this could be in the midst of a very big cyclical change. So we'll have to keep an eye on this, but clearly very, very interesting levels. What's happening on euro? Euro, again, I think if you look at it from the daily, it's fairly clear. It's we're still getting offers trying to protect this 200 DMA, trying to keep the pressure on. Now, if you remember, this has just been a lot of chop, but a fairly clear trading, right? What we discussed is keeping an eye on what happened in the last time our friend Super Mario was on the wires, right? And last time we had that rate decision with the non-farm payrolls, etc., etc. What's happened, this was the range that was put in, right? That's essentially that Thursday, Friday range, so you can highlight it up on a chart. And we know that after you have these kind of ranges set, you know, the odds are just playing for that range to hold short term. So the days after the range is set, you know, fade the upside of the range for a move back to the downside, then fade the downside when the downside can't break for rotation back to the upside. You know, and here, you know, it's fairly clear trade, because if you go back on something like, say, even a 1 hour chart, and hold on, let me just go back onto the daily and get rid of the circles, because obviously it messes things up when we go down to the lower time frames. you can see fairly clearly that all the dips, once we try, we came in, we took a stab at the upside, we got that nice move back down to the lower end of the range, and then the rotation failure here to the upside is clearly in play, and every single dip just kept on getting bought. We had a little choppy action here. That was actually a 50 back play, but globally markets are holding it. So right here, what we're pointing to is same from here, the market trying to test the opposite side of the range, but broadly speaking, we're still stuck in that Thursday, Friday range as we're going to that ECB meeting. So really not a lot has happened. We've stayed in range. It's just been pretty clear range plays. And what we have to look for now going into this week is how are we going to behave, right? What is going to happen here? Clearly, the two big levels to watch are going to be this range that is still holding, that high and that low. And keep in mind that from a daily close, you've also got that 200 DMA. And if you look up a bit higher up, because just these are levels we've been talking about, let me put this up on the chart so we can have a bit of a clear view. Again, the most detailed chart is on the blog, so you see the 200 is up there. So really any move back up, don't be fooled by any move above the 200-day. For this to really get traction, we're going to have to get daily closes above those 3770s. So that's really the areas to watch, right? You'll see the shorts will be trying to protect all these dips the longs will be trying to protect these dips, and the shorts are going to try and protect this area, and we'll have to see post-Draghi how we trade. And clearly that's most likely going to set the direction maybe for the rest of the summer, or at least for the next big move, as we've been hovering inside this range waiting for the next breakout. Okay, so I hope that was interesting. Again, the detailed charts for all the things we looked at are on the blog, with all the levels explained in more detail in previous recordings, but all the levels are on the chart. I hope you guys found this useful. Let me know if you prefer these sessions with the blank charts and then having the more detailed charts on the blog, or you want to look at these with the detailed charts. I wish everybody an awesome rest of the weekend wherever you may be, whatever you may be doing. Thanks for listening. See you guys on Twitter. Have an awesome one. Thanks. Bye-bye. Take care.